So Econet just said the company is worth far more than the Zimbabwe Stock Exchange says it is. And this is a bigger story than you would imagine because it has implications for Econet investing in their network, which affects us all and could mean Econet being taken over by force. But I'm getting ahead of myself, so let's get into it. Econet released a cautionary statement saying they are worth far more than what the stock market is pricing them at, which effectively means the ZSE is failing to properly value companies. And when you look at the numbers, they're right. Econet's total assets, which is their towers, their fiber, their spectrum, their buildings, and everything else, it adds up to about 905 million USD, which is a lot. But the whole company on the ZSE is valued at between 500 and 600 million. So in simple terms, if Econet sold everything it owns, it would make more money than the company is worth on the stock exchange. Now that means undervalued. Now why does this matter beyond just shareholders losing value?
Oh, Galaxy A56, 256 gig storage, 8 gig RAM.
Sleek design, good camera, delightful software, Samsung brand.
All yours today for $395 delivered way, anyway in Zimbabwe. Get yours today. All yours today.
So can you phone him? I got you. Number one, it makes it harder for Econet to raise funding. Because if the market says you're worth less than your assets, then it makes it much harder to raise capital. And telecom companies need a lot of money, for network upgrades and maintenance too, especially if they're going to keep up with growing data usage. Then number two, it's a vulnerability to takeovers. A company that's consistently undervalued becomes attractive to some investors, and they can do a hostile takeover because it means another company or some foreign or local billionaire can buy the company's assets for less than what they are worth. Because remember, we're saying you can buy this company for 500 to 600 million when it has assets over $900 million. And number three, it exposes how weak the ZSE is at properly valuing companies. Because if the largest telecoms company cannot get a fair value, what about the rest? Because if you didn't know, Econet is about a quarter of the total value of the ZSE. So of all the companies listed on the ZSE, if we added up their value, a quarter of it belongs to Econet. So essentially we're saying at the very least, a quarter of the ZSE is severely undervalued. And we know that the other 75% is undervalued as well. So Econet says they are cooking up something to fix this whole undervalued thing. They didn't say what, but we can guess. First off, I doubt they will unbundle. That is to separate one company out to have it trade as its own company, because they already tried that with EcoCash. They listed it separately, but they just recently brought it back. So they did not unlock shareholder value from that. So I doubt they'll be trying again so soon. So in my humble layman opinion, I think it has to be a dual listing of some kind. Econet may explore listing part of the company elsewhere, on another stock exchange to gain proper price discovery. So not necessarily leaving the ZSE, but adding a USD denominated platform, because I don't think jumping ship totally from the ZSE is an option at this point. But who knows, maybe dual listing on the JSE could be an option, or maybe closer home to the VFX. But aside the dual listing, it could be other stuff like this. Imagine Econet partnering with some foreign company or even merging with one. I don't see it happening, but who knows? Or it could be a combination of some of these. Big picture though, the message is really about the ZSE. The market is undervaluing major companies. Liquidity is low and currency instability makes proper valuation difficult, because Econet is basically saying the exchange is not reflecting our true value. So we have to take action ourselves. We don't know what Econet is going to do, but we will be paying attention, and so should you.